I think everybody will agree that life is getting expensive, which is kind of the way things were supposed to happen. But when it jumps more than actually expected, this literally what we call inflation because prices are going out of control. And if everything is costing more than it used to, food, I mean, don't even think about gas prices because gas prices reminded us that, hey, you know what? Oil is really at the very center and the core of our modern day life, even though we may now have electric cars or we may soon have flying taxis, etc., etc. So if you are like pretty much 90% of Americans right now having a hard time keeping up with the bills, especially when it comes to gasoline or natural gas or oil, in order to move because I live in Texas, all right? I live in Texas and here we don't have public transportation. So we rely on our cars to pretty much do everything. 2020 or 2019, I used to pay $25 to fill up my gas tank. And I have, a sedan. I don't have a big truck. Not yet. Now, since the beginning of February, or let's say mid-February, it's now costing me $58 to fill the exact same gas tank of my car. It's more than double, all right? It's more than double. And with what is happening with Russia and Ukraine, people think that even if there is finally the war is over, all right? If there is no, shelling, no bombing, nothing, things will get back to normal in a matter of just a blink of an eye. No, because it's not because the conflict will end that it means that the sanctions, which is really the reason why, the second reason why prices of oil and energy has been going so much. Same thing for commodities, same thing for food cost, all right? So let me share with you in this video a trick that you can actually use in order to make sure you can balance or pay less gas prices at the pump, all right? So it's not something that is kind of straightforward, but even as a beginner, let's just be open-minded, all right? Because when you look at the math behind it, it will make more sense. So people think that, well, gas prices are already high. And it's true. This is a picture of a regular at $6.99, and then plus at $7.19. I don't know exactly where this picture was taken, but it was March 8th, all right? So if you jump into the current gas prices of oil, as of today, the West Texas indicator, the West Texas index, which is the index for oil trading here in the US, in opposition with the Brent trading in London Stock Exchange, has now closed at 105. It lost 10% yesterday on the news that, well, maybe there might be some final talks giving hopes of the end of the Ukraine crisis, which people have to understand that even without the Ukraine crisis, prices for oil and energy were already set up to jump. They were already set up to jump. Why? Because of the supply and demand. Everything here on Earth is getting priced based off of the law of supply and demand. The more difficult it is to find something or to get something, the higher the price. It is just how everything works here on Earth so far when it comes to capitalism and trading. So because the pandemic created an unprecedented levels of shift in this whole market, the producer of oil and gas decided not to do what they were doing so far, which means pumping and pumping and pumping, drilling and drilling and drilling, because it cost money to do so. And 2020 almost wiped them all out. Pretty much everyone. It doesn't matter if it's US, Europe, Saudi Arabia. They were on the brink of getting wiped away because nobody was consuming oil. So what they did is they started being more disciplined with money, and they started being, more disciplined with investing. So they stopped production. And with this current administration in the US pushing for greener energy, it's not going to change anytime soon. So it was already set up to be triple-digit prices. So the war with Ukraine just came here to accelerate the move up. So how can you make sure you use this trick I'm talking about to kind of balance these high investing prices? Well, you have to buy stocks of companies producing oil. America was at some point the number one exporter of oil in the world. Now it's Saudi Arabia or UAE. I don't really remember. But the reality is, as an investor, you will benefit from prices going high, which is kind of the contrary when you are a consumer. But because we are at some point all consumers of oil, even if you're not driving on a daily basis, you're still using oil, and you're paying for high prices on the food cost. So at some point, you will feel it, and it's hard, it's painful. So what kind of stocks can you buy? Well, I always recommend, based on my experience, because I do hold these stocks since pretty much March 2020, the stocks on the small mid caps, because they are more volatile and they are still way undervalued. All right. So meaning they have pretty big room to move. So let's just take this Houston-based company, for example, Callon Petroleum. I've been talking about this for many months now, even years on my channel. The target here, short term, it's $80 a share. $80 a share, we're talking about $20 per share. So if you only hold 10 of these, you are making $2,000. $2,000, not 200. Right? That's 200. Now that can happen next week, or can happen next month, or it can happen by summer. Nobody knows because nobody can predict the future. But the bottom line is, if you do invest, you're gonna see that by making money here, you are also balancing what you're offsetting what you're paying for gas prices when you fill your gas tank of your car. This is another one, VET stock. It's sitting at 21, but it can easily go back to 26 or even 30 or even 40, because this is not trading where it's supposed to be with oil prices above $100. All right. Now, if you are willing to follow Warren Buffett, who bought more than $15 billion of this stock, then follow Untitled Petroleum, another Houston-based company. The price target here, short term, it's the 70s, mid 70s. So we're talking about another $20 upside per share. And then if you are willing to be a little bit more aggressive, you can go with this, Canadian company. It's what we call a penny stock because it trades below $5 a share. All right. So this at some point was trading at $3 or $4. All right. So we're talking about what? Is it $4? No, we're talking about a 58% upside. This can even go up to $8 a share. These are the targets, folks. $8 a share. So I don't know if you're gonna see the point here. There's nothing you can do not to be hit by high gas prices, high oil prices. But at least you can offset the money you spend on that, whether it's buying food, moving around, traveling, especially as summer gets here. I mean, as an investor, you profit from that. And this is what I've been doing for the last, swing trading, day trading, investing, all of that at the same time. You can choose whether you want to invest, whether you want to day trade, whether you want to swing trade, because they're really volatile and there's really upside and room to grow. But it really depends on you. Now, if you want to see more tips on swing trading, day trading, it doesn't matter what kind of stock. Well, if you haven't been subscribed to the channel yet, please, that will be the opportunity to actually get here and you know what I mean.